cash trap we are seeing is combinations of indicators, relevant indicators that has been observed that the market respects often, more often than others. When the market comes around them, there is usually a reaction. So all these indicators are combined to form a strategy. Combinations of indicators is what gives you a strategy, right? So each of these indicators you see in these strategies, they have their own work. And what are the things inside of this cash trap indicator? I am talking about the top layer right now, not the stochastic, not the RSI right now. I'm just talking about these top parts that we can all see. What are the things that is inside this indicator? Right. The first thing we can see right now is the Bollinger Bands. We have the top Bollinger Bands and the lower Bollinger Bands and the middle one. You see this middle one that you see there is the 20 EMA, exponential moving average, which is added because there are some moving averages that are common that the market respects. In fact, people use them for crossovers. Whenever they cross each other, there's a change in direction of the market. We have the 20, we have the 50, we have the 100, and we have the 200. Out of these four, right, two are in the cash trap strategy. The middle one that you are seeing is the 20. The line that is turning from red to green to red to green is the 200. Now, what is the 200 used for? I will explain, but let me continue by naming all the strategies, all the indicators in this strategy right now. So we have the Bollinger Bands, we have the 20 EMA, we have the 200 EMA, we have the SAR, which is this dotted line you're saying, right? And we have our binary or some tendency. I know that is not a new thing to each and every one of us. We would have known about the binary or some tendency. We have our binary or some tendencies, think purple line, right? Then the DMI signal, the DMI stochastic signal. That means whenever the DMI cross down and cross back up for a buy, a signal of a buy will show up here. It's not showing you the chart of the DMI itself like it used to, but the signal itself is what you will see on your chart. So are we taking notes? We have the Bollinger Bands, we have the 20 and the 200 moving average, we have the SAR, we have our binary or some tendency purple line, and we have our what? DMI signal. That is all you have in the cash trap indicator itself. That's all the indicators they put into this cash trap indicator you're seeing. And that's why it's premium, because this is an indicator that is sold on the IM itself. They pay monthly to access it. So now, what are the works of all these things I mentioned, right? The first thing to look at all before you even know what to trade, to know either to look for a buy or to look for a sell, is the 200 moving average. The 200 moving average. Is it the green color or is it the red color? Whenever the market is above it, it will be the green color. Whenever the market is below it, it will be the red color. Now, once it is the green color, it has given you its own confirmation to look for what? A buy. Whenever it gives you the green color, it has given you its own signal telling you to look for what? Buys. Now, let's move to the Bollinger Bands. What are you looking for in the Bollinger Bands? Once the 200 has given you the signal to look for buy, then you are now looking at the market to either be at the 20 EMA, which is the middle line, or the green lower Bollinger Bands. Let me repeat that so that we don't get lost. The 200 gives you the buy signal. The market is above it. You are looking for the market to be hitting this middle line or the lower green line. That's the confirmation of the Bollinger Bands for a buy. The market is at either this black line or this lower band. Good. The SAR has to be below where the market is. It has to be following the market below. The moment it switches up, it's telling you, it's giving you a sell signal. But if it's below, it's giving you its own buy signal. So what's the buy signal of the SAR? It will be below the market, just like this. You see this dotted line below the market. That's the confirmation of the SAR. Right? The binary or some tendency, what is it there for? It is for a stronger support and resistance. This comes into play when we use our markup, our personal markup as a Binary Mastery Academy student, right? Which is the most important confirmation in any strategy we're using. This comes into play because wherever you see this purple line, your markup is meant to be there already. Right, but even if you don't see the markup, the purple line is to guide you as to where to take a stronger support or resistance. That's the work of the binary or some tendency. So let me take it again. We are looking for buys, right? The market has to be above the 200 moving average. It has to be this green color. The market has to either be hitting this middle band or this lower band. Look at this. It was hitting the middle band there. What happened? It came up. It was hitting the lower band there. What happened? The lower band in conjunction with what? The purple line. What happened? It bounced up. The SAR is where? Below. Now, the only thing you want to be careful about is the SAR. At times, it comes to the party late. So if you have all other confirmations in place, you can still go ahead with the trade. Don't let the SAR confuse you. At times, it is late to the party. Look at this trade. The market was below, was hitting this middle line. The 200 has given its signal, but the SAR is where? At the top. Meanwhile, the market still moved up, even while the SAR was at the top. So don't let it confuse you. You want to be careful with the SAR. At times, I put it off. It's just there for extra confirmations. I will say it one more time. Looking for a buy on Cashtrap. The market is above the 200 moving average. The market is hitting either this black line or this green line of the Bollinger Bands. Then your SAR is below. Then the market is either hitting this your purple line or your personal markup line. Then the last confirmation that comes with it is the buy signal from the DMI stochastic. That signal buy, it will be below. Because I went back, the strategy is done in such a way that once you've gone to an extent, it will stop. This is where the DMI gave the last signal, but we went way back, right? But you will see that buy there. That's another confirmation. Now, the more the confirmations you have, the better that trade, right? But what is the most important confirmations, guys? Your personal markup line in conjunction with your what? Purple line. Your binary or some purple line. You should be more confident taking that trade at your purple line. It doesn't mean the market will always come to the purple line. But if you have your personal markup line there, it will be better. That's why that is the first thing I teach us here to master, because that's the most important thing. If you have gotten all what you need at the top here, the work is not yet done. You still have two indicators for the Cashtrap, which is your stochastic and your RSI. Now, what is the signal you need your stochastic to give you? You need your stochastic to give you an oversold for a buy. You know, we are treating buy right now. You need it to be yes and oversold. It has to cross this green line right here, telling you the market is oversold and ready to reverse. Now, what is the confirmation you need the RSI to give you? Now, this is where this is very important, guys. It is where it is very important. Please take note of this. This is a very important thing. Now, the RSI is designed to give you signals in another way. Now, the RSI has this dashed line at the middle, right? The moment the market is above this dashed line, you are looking for a buy in the market. Either the market is coming to hit it right here, and it has not crossed. Make sure it's not crossed, right? Or it's above. See, the farther you can see this RSI from this dash line, the farther you can see it, the upper you can see it, the more you should be looking for buys. Especially when it's far away like this and this one is oversold. That means this is ready and this is telling you to still go ahead for a buy. See what happened. The market went up. Right? It was before that you are looking for these to be oversold and these to be oversold. No, the new RSI settings is showing you the momentum of the market. Once it's above this dash line, the farther it is, the more you should be looking for buys. But the moment it crossed this dash line and is now at the lower one, you are looking for what? Sells. Avoid taking buys. So now these two confirmations needs to be added with all the confirmations I've said before for you to know you have a good trade. Now check this out, these two trades. Although we have our markup line here, you can see the market broke it here and was retesting it here. So you can take this as a confirmation, right? It did not actually touch this, but check this out. This was oversold and this market was high above as a buy signal of the RSI. And what happened? Now check something out again. It's around the 45 minutes. I don't want to mix all this with the timing again so that we won't get confused. But this is not the first time I'm talking about the market timing with our strategy with us. See, all these things are what you need to consider together for you to practice and get perfect with. Look at this one too. The market actually reversed as the 10-15, even when all the confirmations are there. 10-15, 7:45. So look at all the conditions for a buy that was given and see how the market reacted to it. The cross, the moment the market, the black line crossed them, is telling you this is switching from an uptrend to a downtrend. The moment it's switching from down to up, is switching from a downtrend to an uptrend. So the moment you see that switch between it, you know, that movement switching, the moment you see this cross right here, you have to stop looking for sells and start looking for buys. The moment you see it cross down and start moving down, you have to start looking for sells and stop looking for buys. That's this black line is the boundary between the two, upper momentum and lower momentum. Yes, the higher you see it above, especially see the moment it has crossed this green line, that's when you are actually in a very buy movement. The farther it is from this line, the stronger that buy momentum, right? The farther it is from this line. So, you know, before the RSI settings, once it crosses here, we are looking for sales. This RSI now, the farther it's going higher, the higher the momentum, and that is even when you should be looking for a buy. Once it crosses this and it's touching this red line, especially when it's below this red line, is a lower signal. You are looking for sales. So now let's go for a selling market. What is the first confirmation you need to know that there is a selling? You are looking for sales in the market. I believe I talked about it earlier. I will say it again. You need this cross over here. You see, the market crossed this, and what did you see? A red line. Exactly. It has to turn red. It has to turn red. The moment it turns red, you have your 200 moving average confirmation. Bollinger Band's confirmation, you need to see the market at the higher Bollinger red band or this black line again. So this black line will act as a support on an uptrend, and it will act as a resistance on a downtrend. Now, the 200 moving average gave us its own signal here. We are looking for this market to touch either the upper band or lower band. See what it did here? It touched the black line. So we have the Bollinger Band's confirmation right here. Right? What about the SAR? It has to be above, right? Which it is. Then check this out. This was a resistance right here, which your line would have given you as well. That's another confirmation. So 200 moving average, you turn red. The market will be either at the black line or this line, right? The SAR at the top, which is the black line. And then your resistance must be there as well. Remember your personal line. If you were lazy to do it, make sure at least you are seeing your purple line as well. But your personal line would have gotten you this. In fact, when this market came back to this upper band, this line is still the same area. You would have taken this sell again because the 200 moving average is still what's red. So you are looking for the market to touch this black line or touch this red line. That is the confirmation of this top one. Now let's go to the RSI and DMI. Now you need to see this. Check this out, guys. Where is this market? Is it above the dash line or below the dash line? It is below. Are we all seeing this? It is what? It is below. So you need to see the stochastic overbought. Then you need to see the market below the dash line. That is a selling momentum. So look at all these confirmations. Why wouldn't you take this sell when this market was eating? When this market was eating this resistance black line again. The stochastic was overbought here again. It was hitting this. This was around the black dash line, which is still a signal that is still lower because it has not fully crossed. If you took this sell right here, because you will still have your resistance here anyway, you will still win this trade as well. So you have all your confirmations. And look at the time, guys. This is what? 2:15. Quarter hour. So the issue of not knowing when to get in or the market reversing is just because you have not gotten what you need to see before you need to sell the market to yourself. You need to have what you need to see before you go in. You need to have a strategy. You don't just go in based on feeling that I feel this market is it's going to move here. I have a feeling it's going to reverse there. No, you set up a parameter. Once I see this and this and this, that's when I go in, and you do not go against it. This is actually one of the most easiest things if we practice and make it work. So guys, we understand what you need to see to get a buy. We understand what you need to see to get a sell. That's just the way it is. But then another confirmation that you might not see here is the 200 moving average. Whenever the market is around the 200 moving average, if the market was below and it's touching the 200, this is an additional thing for us. It is an additional trick. The moment the market is around it, if it's below it, it will act as a resistance for that time, right? If it is above it and is touching it, it will act as a support for that time. So you can use that as an extra confirmation whenever the market is around the 200. Is it always going to give that reaction? No, but it will give that reaction more. Let's see how many times the market touched the 200. It touched it here, what happened? It pushed it down. It touched it here, what happened? It pushed it down. It touched it here, what happened? It did not respect it, right? It disrespected it both going up and going down, you see? But the next time it came around it, it pushed it down. That's 3 out of 4, right? Disrespected it here. It did not, it was just moving around it right here. Can you see? But look at this, it came around it here and pushed it down because both it and the 20 EMA was together. Are we all following? Disrespected the two of them here. So the market does not owe you anything. It doesn't have to, it's not a must for you to respect your analysis or anything. But the more time, the fact that you are doing the right thing and you know you've done what is right, it will always give you more wins and more better results than the ones that will go against you this way. This thing is very easy, but we need to practice. You need to stay with the market, check out whatever strategy you're using, and check all these things out that I've explained. I believe we all understand what you need to see to get a buy now and what you need to see to get a sell. But I need us to remember, all these you would not even consider using if you do not have your markup in place. Your markup is the first thing you need to use, guys. The first thing you need to get. See all this right now. The market is above, right? See, look at this trade right here. This trade. Let me put the white line there so we can all see. It was this support right now because the market was above it. It was coming back and touching it, right? This is a green line. It has given you your buy signal, right? You have your support line right there. These are crossed, right? This is above the dash line. Why won't you take this buy? Although it didn't stay long, but for the whole full 5 minutes, it went up. And look at the timing. This is 6:30, hourly reversal. Quarter half hour reversal. But the moment this now change direction, you know the momentum has what changed. It has gone below. You are looking for sales right here. So you are looking to see these overbought. Now look what happened. This was the only place we saw these overbought. And see, it was at the middle line. This is red. You are looking for sales, right? It touched this, you took your sell. What happened? It dropped. It crossed it again right here. So now you are looking for these to be over what? Sold. See where it oversold. It was at the 200 moving average. And if you took some buys here, you will clear. So it's just a matter of following your strategy and all your confirmations that you need to see, guys. But as for me, even with all these confirmations, there are filters. I used to say it. When all these has given me there are confirmations and go ahead to go into a trade, even at the 20 moving average, I'm still taking the trade at my what? At my line.